Good morning. Today is Wednesday, January 27th, 2021. I'm Joe Terrell, President of Terrell & Company, private wealth managers in St. Louis, Missouri. And we're here for another update on behalf of our clients, associates, and followers with our thoughts on the economy and investment markets. It's been a fascinating start to January here in 2021. We are in the process of vaccinating people around the world, and that sort of leads us into our outlook for the world economy, which is very positive. When you look around the world at places where the virus is already in the rearview mirror, meaning New Zealand, Australia, where literally they may only have 2 or 3 new cases a week. China, where they're having 10 cases per week. Economies in these areas are nothing short of booming. They're running at rates that are higher than where they were in 2019 before the pandemic. We see no reason why, if in the United States, Europe, Brazil, India, if we can get people vaccinated, create herd immunity, regardless of how you want to say it, get the vaccine in the rearview mirror, we feel economies are going to boom in those areas also. When you look right now at ocean freight transportation rates, they're at record highs. When you look at other economic statistics, even with the virus still holding down economies in some of these areas, you see very good economic news. Many people in the United States in business are struggling because they cannot get their supplies. We talked to someone in Ohio recently that in their business were saying that their suppliers have put them on 90-day notice, meaning it may be as much as 90 days before we can get you the materials you've purchased. So gone is the just-in-time delivery of inventory that everyone has been working on. Now it's wait to get the material that you need to manufacture and produce. So it is showing us two things. One, because they can't produce because they're unable to get the materials, that's hurting the economy. But on the other hand, it's also giving you an indication as you go up the supply chain all the way to producers of basic materials like aluminum, copper, and such things, as they're expanding and producing more and it begins to filter down, you can see, gosh, that should create a pretty good economic boom, and we believe it will. There's a great pent-up demand out there. So the question becomes, in the last week or two here of January, there is concern that maybe the vaccine's not going to work. No, the vaccine is going to work. There's more than one. The evidence is the vaccines are working, and they're working very well. But there are people worried that maybe we have another economic shutdown coming because of the virus. No, the actual statistics in the United States, in Europe, Canada, and other areas actually show the number of new cases and hospitalization in the last few weeks is beginning to fall. So we are very encouraged by what we see around the world in an economy standpoint, and we are also in the camp that it's going to get even better. And as the months go on and we get into the spring and out of the winter and even into the summer, we look for a very strong economy. The IMF recently put out their data saying that the world economy, put everybody in industrial countries all over the world together, that in 2020 world economies contracted, shrunk the world economy at a 4.4% rate. Their prediction for 2021 is 5.6% growth. We concur with that and even think it might be a little bit better than that. So we're very optimistic about the worldwide economic recovery. As it relates to investment markets, we have seen a shift, if you will, of more investors moving to basic industry companies, companies that are directly tied to the economy. And we also feel, as an investment standpoint, this is going to continue. We're going to see good earnings later this year for the people in banking business that has customers that are dependent upon a good, strong economy, travel, leisure, energy. We are, in spite of what's happened, we're very bullish on energy. It drives the world economy. You're not going to have worldwide economic growth without a major increase in the demand for energy of all types. So currently, the markets have, if you will, taken a breather, which is okay, and there's concerns that there's a lot of speculative fever in the market, and therefore it may head radically lower. You're going to see somewhere a correction in stock prices. I think it's been going on the last couple of weeks, and maybe it will continue to go on. But ultimately, as long as the Federal Reserve Bank of the United States is as easy on credit as they are right now, and it's unprecedented how accommodative the Federal Reserve is to the economy right now, until that policy changes, you will see investment prices ultimately move higher, particularly with industrial companies, not the glamour high-tech growth stocks, but the industrial companies that will benefit from this major economic recovery. So with that said, we are asked what will change our mind about this bullish outlook. Well, what will change our mind, and I think everyone's mind, is higher rates of inflation. The Federal Reserve in the United States, the Bank of Europe, Japanese Central Bank, you can't print the type of money that they are doing without ultimately seeing higher rates of inflation. It's not here yet, don't know exactly when it's going to come, but until you see inflation move much higher, which will force the Federal Reserve to stop this accommodative policy and actually increase interest rates, until we see evidence of that happening, we think the investment markets are going to continue to provide very nice rates of return. Do we think ultimately that's going to happen? Absolutely. Do we think somewhere down the line we're going to have to pay for all of this free money we've thrown all over the world? Yes, definitely that's going to happen. But until the Federal Reserve Bank shows signs that their hand is being forced, they can no longer be as accommodative as they are with, if you will, free money, we'll continue to see prices move higher. But we are being very cautious and diligent about watching for inflation moving higher, because that ultimately will stop the Federal Reserve Bank and central bankers around the world from being able to, if you will, just print money and hand it out. So with that said, Brian Curtis, who is our cameraman and producer, thank you, Brian. A belated very happy new year to you. And we'll be back hopefully in 3 weeks or so with an update. Thank you.